Welcome to the Real Estate Masters Podcast, where we interview the top names in the real estate game. If you want to grow your real estate business, see more podcasts, or get free resources, go to www.remcommunity.com. The only podcast that allows you to directly connect with the guests and many of the highest level names in the real estate game.
You are in for a treat with our next guest. Do me a favor, subscribe to the podcast, leave us a review, and don't forget to go to remcommunity.com to connect with some of the highest level real estate professionals in the United States through our community and through our high level masterminds. Let's go.
All right, welcome to today's episode. We have Chris and Collin on the line. They are successful real estate investors in the commercial real estate world. They do syndications, they do apartments, they do a lot of stuff in the Midwest. Which is my background or my playground, I guess, if you will. So I look forward to talking high level about commercial real estate and syndication. So let's jump into it. How are you guys doing today?
Awesome. Thanks for having us. Appreciate it, Tony.
Absolutely.
Doing great, Tony. Thank you.
Good, man. Good. Well, as usual, I like people doing high level stuff. You guys own hundreds of apartments. You guys are doing some great things. So I guess I'll let you guys start. So tell us, I guess, a little bit how you started, a little bit of your guys' background, so that the listeners kind of know where we're coming from, and we'll dive into some good topics.
Okay. Yeah, I'll get started with this. So just a little bit of background about myself. Live in Omaha, Nebraska. Moved out here about 13 years ago. Family-wise, have 3 kids under the age of 5. A wife. We've been married for 6 years now. So that's kind of me personally. Real estate started in 2017. I was at an insurance company working in IT. I was a project manager. Similar story to a lot of people, great job, the dream, 9 to 5. Anyways, picked up Rich Dad, Poor Dad. Kind of mind shift happened, started reading additional books on real estate finance. Ended up partnering with an individual outside of Chris, who's on here, but actually this individual, we all partnered together. His name's Steven Sykes. Partnered on our first deal, a 3-plex, and then continued just to get properties from there. Did a little bit of, did some small letter campaigns, created a meetup, and started a property management company. And then Chris and I partnered to create Park Ave Capital, which, as you described, is a JV syndication real estate investment company.
Yeah. So within anybody's real estate business, there's many different components. So there's the finding deals, there's funding deals, and then there's the operations and just kind of the back end fulfillment. So a lot of people have trouble finding their first deal. And I think commercial real estate for the last several years has been like the big thing for like residential investors. When they have some success with residential, they go to commercial. Or some people just want to jump into commercial real estate because they want to do hundreds of units at one time, as opposed to doing, 1 or 3 units at a time. So I guess talk us through that. What has been some of your, if you could give the listeners some nuggets, what are some of the best ways that you have been able to acquire properties and find your best deals?
So I'm going to let Chris, do you want to jump in on this, and then I can add to it as well?
Yeah, sure. I think it's just really trying to stay top of mind, right? So like at first, it was hard to be taken seriously by most people, right? We've never had a deal. People didn't know who we were. We didn't have bank relationships. We didn't have broker relationships. But it's just kind of staying top of mind, getting that one deal, getting a 2 duplex, getting a 4 unit, buying a 20 unit, buying an 80 unit, showing that you can actually follow through on stuff. And then once you start doing that, you're obviously lining the pockets of the agents. And that keeps you as somebody top of their mind that this person's going to close. I'm going to bring them deals. So that's how you stay in agents' minds. I mean, Collin has a meetup. He mentioned over 1,900 members now, probably over 2,000, I guess, right here in Omaha. That's a great way. That's really helped us. He's got a lot of connections through that. We found many partners, people who are investing with us, people bringing us deals. So that's another way that we've really stayed active and in social media, whether it's LinkedIn or pushing out Instagram stuff, Facebook stuff. The meetup has a private Facebook group. So it wasn't like that day one because no one knew who you were, but you continue to close deals and keep investors happy. And you just continue to get more and more. I mean, the floodgates just open.
Yeah. And I think something just to add on to that, if you're looking at the day one, is being prepared. So you may not have a deal, but at least being prepared to have those conversations, meaning that you've already spoken to a banker, you understand what a cap rate is, you understand, and you have, I guess, where you can focus on. If you're limited to a certain amount of capital, that basically limits the deal size. Then you limit your area that you're looking at. You're limiting the class of project you're looking at. You're looking for a heavy value add, et cetera. So understanding that really helps you get over the initial hump because you're laser focused. So when you're having conversations, you can be very specific, so that whether it's the banker, the broker, the fellow investor, you are, as Chris said, you are top of mind, and you're top of mind because you have a very specific ask.
And what do you think is the biggest thing for you guys getting started? Was it more finding the deal? Did you feel like you needed to put the money together, at least part of the money together before you found the deal? Like for residential, my philosophy is find the deal, the money will come. Like if you can find a good deal, the money will come. You can figure out how to find the money. Would you say it's the same thing with commercial? Or do you feel like, because it's bigger numbers, that you need to be a little bit more prepared on the funding side of it?
I mean, I think if it's your first deal, it could be difficult to raise $3 million if you've never had a deal before, right? Taking down a $10 million apartment, you can say it's a great apartment. That $3 million may never find you because you don't have any experience. I can tell you, I did jump in, Tony, the same way you did, or from what it sounds like, is that at my first deal, we're basically a single family duplex. I found the deal before I had the money, but the money I needed to find wasn't 3 million. It was obviously a lot less. So I think it kind of depends on where you're at in your experience and the process, because now they're happening simultaneously. I mean, we're out there raising for deals either we have or we don't have every day, but we're not putting offers on places until we have the money. We may just have to figure it out, and that's just it kind of happens simultaneously. But for a beginner, it's probably most important, especially for the residential 4 and below, or at least lower capital raise. Just find the deal. That's what I would suggest anyway.
So let's say a 40 unit apartment building, if someone's going after something like that, I imagine you probably need to have a little bit of the financing lined up, or at least an idea that you can get the deal closed before you put that kind of deal together.
I mean, I would suggest that because your chances of closing are a lot better. I'd hate to see you find a great 40 unit deal and then find out 4 or 5 weeks in, the bank won't fund it, or they won't fund you, or you can't find that $2 million. You could have found 40,000 for a single family home, but you might not be able to find that 2 million. So I think it just kind of depends on how big you're going right off the bat and your experience.
Yeah, for me, I wish I didn't. Sorry, Tony. I wish I didn't start off like this, and maybe this was a limiting belief. But I looked at the money that I had, and that was the gauge of what the max I could buy. That kind of limited me, but it gave me an actual benchmark to look at. I knew that with what I had, that's what I could purchase now. Things have changed a lot with Chris and I, because we do have investors, et cetera. So we can now, it's not what we have, it's what our group collectively has and what the deal looks like. But yeah, I mean, chicken before the egg. I wish I would have known more, because I probably would have looked at bigger deals and started preparing for those bigger projects earlier.
Mm-hmm. What is your criteria? Like, do you have a specific criteria of like, it needs to be in the Midwest, it needs to be a certain amount of units, it needs to be a certain rent? Like, do you have specific criteria you're looking for? Is it more about like the return or the cash flow? Like, tell me about your model and what makes a deal to you compared to a deal not being good to you?
We prefer the Midwest because we're comfortable with the Midwest, and that's where we started. It's not that we wouldn't invest outside of it, but there's just certain parameters you have to add on to the end. Do we have some boots on ground if we're investing in Portland or someplace random that we haven't invested before? Or do we have someone on the team, whether it's the GP team or something, that actually has some type of background in that area? I would never say never, but I mean, we're extremely comfortable in the Midwest. So our parameters certainly would be B and C class, something with some value add that allows us to just force appreciate the asset. And we're very, very comfortable in the Midwest. We'll invest outside of the Midwest. It's just going to take a couple more boxes to check. But for the most part, if you on the back of a napkin or at a cocktail party for what we invest in, B and C class, value add opportunity, certainly 40 units and above. And that's kind of what we look for.
And do you plan on holding those long term, or is it more of a you want to get the upside, you want to get it stabilized, and then a year, 3 years, 5 years, sell it? Like, what's your exit strategy?
Yeah, I think the reason we're kind of different than others and that we've gained so much traction and so much attention from our investors is that I feel as though it's kind of the best of both worlds. We will force appreciate that asset and we'll refinance and we'll pull all the cash out. And so our goal is to pull out 100% of what we put in. And that is a 3 to 5 year plan, right? And we've done that now successfully 20 times. The goal then, if the investor put in $100,000, 3 years later, they get 100,000 back. That entire time they were receiving cash flow. And then after that 3 years, they get their $100,000 back. They can do with the 100,000 whatever they'd want to. The next deal, buy a car, whatever. But they continue to stay on as an owner of that asset, and they continue to get cash flow, which would be indefinite cash flow because they don't have any money into the deal. And it kind of allows people to scratch that itch of getting into real estate investing as opposed to just like a short-term flipper. There's nothing wrong with that. Collin and I have made very large checks on accidentally flipping small multifamilies and even single families. But it is nice to have, and what we really push that our thesis is you want residual income. I'm certainly not going against anything Tony's done in the past because Tony's done a freaking great job of it. But once I'm done flipping that 402nd house that I flipped, I'm not making any more money unless I flip a 403rd house. And I think one of the benefits that this is the prism through which we view our investments is that it's nice to know that after that $100,000 investor comes to us and invests $100,000 and they decide to never invest in real estate again, they'll earn income and their wife or their husband and their offspring and their estate will earn income on that asset indefinitely. And that's just our mindset that we like, that we feel comfortable with and that we push.
No, I like that. I know a lot of other people that have that same model in the commercial real estate field. Some people keep ownership with those investors and some cash them out and pay them, maybe give them a little bit of a nice payday for their time, 20, 30, 50% return, whatever the number is. So that's great that you keep them on and keep them cash flowing. That's a great model. What is your long-term game? Are you guys looking to just keep doing what you're doing and acquiring the same types of properties? Do you want to expand nationwide? Were you going to bigger markets? I'm just always curious what people's, I don't want to say in game, but I guess long-term future goals are with their investing portfolios.
That's a Collin question.
I think that's both of us. Yeah, no, I mean, that's something that, looking back 4 or 5 years ago, it would be hard to picture where I am now. And I think that's for all of us. What I can tell you, what we are doing is, so our primary market is Omaha. Omaha, we know really well. Well, just as many markets, there's only so much product here. So although we are top of mind in many avenues, we started looking outside of the state, outside of the area. So we have been venturing into, other Midwest markets, whether it's Sioux Falls, maybe it's within 300 miles from our home base. So we're in Missouri, Tulsa. So we are looking at those different areas. And I think it is to continue to build that up. We do have some other ancillary businesses. We do lend money as well. So that kind of feeds into just our business of, we find more real estate through it. I guess every additional connection, the property management company, looking at starting a brokerage soon. So I think just continually to expand and I guess get better and better at our operations, but really focus in the Midwest and continue to build up our portfolio. I mean, we could always give a unit count. Yeah, we're looking to double in size this upcoming year, but there's all sorts of events that can occur. But I think just continually to build on our business, refine our processes, and kind of stick with our criteria and keep kind of doing similar things and adding that vertical integration.
Yeah, and I know that we'll invest outside of the Midwest. We've already had a couple of deals under contract, and we're actually looking at a pretty enticing one right now that's out of the Midwest, and we'll continue to grow. It started in Omaha, then Kansas City and Sioux Falls and Tulsa, and soon the Southwest, and it'll grow. It'll take time, but we're certainly open to that because in the end, as long as the asset makes sense and it pleases our investors, and of course it helps us, we'll find our way there.
So I know that, you guys have scaled up pretty quickly in a short amount of time, right? So what would you say are the keys to doing that? Like, is there, one or two things that are like, man, these things happen, and if they hadn't, we wouldn't be nearly where we are. So that would be one side of it. And then I'm also curious what kind of big hiccups you guys have had to overcome that have helped you guys, I guess, to grow. Because anytime you have an obstacle, you get over it, and so you learn a big lesson from it, and then you learn not to do that again, for instance. So I guess start with the success side of it. What are some things that you could say are things that have helped lead to your success that if you were to give that to a newer investor, that you would tell them to do?
So just because it's kind of top of mind since I'm reading this book, and this is before I didn't even really think of it this way, but who, not how. So I think that's what's helped Chris and I, whether it's through each other's partnership, finding mentors, now having employees for our property management, for our investing business, allowing us to focus on focus on our high dollar tasks and being able to recognize those. Now that's something that's, we've had successes and failures with, hiring the wrong person, hiring the wrong company to help us. But overall, I think that has really, really helped us. So I think anybody that's asking who, not how, if you keep asking how, you're going to be drafting your own legal docs, you're going to be your own CPA, you're going to be doing your own marketing, you're going to be doing your own fundraising, and it'll limit you. So finding those around you, partnering, basically.
Anything you want to add to that, Chris?
I mean, partnering for sure. I mean, do not be selfish with it. Do not expect to have the entire pie yourself. There's no reason, there's no way we would have gotten to where we have just in the short amount of time we've done this, unless we were willing to kind of spread the wealth and soak up the knowledge of our partners or people we're learning from, share in some of the assets, or share in some of the returns and whatnot with different partners, bringing capital or bringing deals, or, relying on people's different backgrounds of what they've done, but not trying to keep it all to ourselves. I think bringing on and kind of that abundance mentality is huge if you want to succeed.
Yeah. So it's interesting. You said who, not how. I've had that conversation so many times in some of the podcasts I've done. And then I host real estate masterminds as well. And we talk about that a lot. And that's where you get a lot of your leverage. I wish I would have learned that the first 10 years of my business. It was always me, like, how do I do it? How do I dive into it? How do I create this spreadsheet? And it's like, now at this point, it's like anything I play hot potato with it. It's like, I don't want to be the one doing it. It's like, I need to find the person that's better at me than doing it, or that can do it while I can do higher leverage or higher dollar activities. So it's interesting that, the conversations that I have with high level people, they say the same thing. It's like, how do we get other people on our team to help grow the business and do things at a higher level, and do, the business owner is the one that needs to have the vision and do the things that drive the company. And then all the other things need to fall within a team that takes a lot of those things on. So what
helped you learn that? What helped you learn that?
What helped me learn it? What helped me learn it was stress and burnout. It was like, I was doing, like, you've seen the organizational chart where it's like you on top, you, like, and even when I filled in with people, like, it's still like, it still didn't like pan out the way that I wanted to. So 10 years ago, I hired a coach that had a business like mine that didn't look at properties, didn't put them under contract, didn't manage the contractors. And I'm thinking to myself, how is that possible? Like, I feel like I need to put the properties on the contract. I feel like that I need to manage the contractors and manage these, $50,000 budgets on all these properties that I'm doing. And when it comes down to it is that, 5 years later, I built out a team that did all of that for me. Now I live 2,000 miles away from my business, and my business continues to grow while I work a few hours a week on that business. And now I've got other businesses that I run. So it seems like a lot. And that's why I asked you if there's any things you had to overcome that were bad that taught you a lesson where, you learned something out of it. And 10 years ago, I had to fire my whole staff because it was the wrong people and all that. And I'm glad that happened. I hit a rock bottom in my business, like mentally, because I was so frustrated with, and it just what's the term for it? I guess rock bottom's the best thing. It's like you hit rock bottom, you got to figure out how to build yourself back up and be better for it. So it was a lot of pain and suffering.
Well, I'm glad we're learning that before the 10-year mark.
Totally, man. Totally. Yeah. Yeah.
But still having the wrong people. I mean, we still have had that, whether it's, employees or contractors.
Yeah.
Those definitely create the biggest issues. So when you get the wrong who.
Yeah. And it's going to happen. I mean, some of it's trial and error. It's like, we have a really good hiring system. I feel like we do, behavioral profile assessments. We have them fill out a detailed application. Like we have them go through a bunch of stuff before they even talk to us. So that weeds out a lot of, just tire kickers and things like that. And then, I feel like we're pretty good at reading people and checking references. I mean, so we have like a pretty good system, but things happen, right? I mean, you could vet someone for 3 months and hire them, and all of a sudden they get into the business and you realize they're a jerk to everybody, and
Yeah.
so yeah, I mean, it's a lot of a learning process and just figuring out how to build those systems. And I think culture is a big thing. We just talked about that in a call a little bit earlier ago with a bunch of investors, is that, you have to build that culture for your business. And if you don't have a culture for your business, when you hire someone and bring someone in, whether it's a subcontractor or an employee, it's like for us, if they don't fit within our culture and have our core values, then we don't want to do business with them. If we feel like they're hiding something, if we feel like they don't collaborate, like our team works really well together. Like we get things done. We don't talk behind each other's back. We help each other when you need help, rather than saying, I got my own stuff. I don't have time for you. It's like we have this culture that when we bring people in any aspect of our business, that if they don't fit in that culture, then they're not a part of our team. And if I look at the first 10 years, I want to say all the hires, but most of the hires I made, if I had that standard in place, I wouldn't have hired those people for sure.
That's great.
Yeah,
that makes sense.
So, I guess let's expand on that a little bit. What about you guys? Like, who are some key people in your organization or within your network that you feel like have been a huge help to your business? So I mentioned 10 years ago, I hired a coach that was where I wanted to be. And within a short amount of time, I was able to build my business similar to his, where I wasn't, working in the day-to-day operations of the business. So there's that aspect of like mentors or coaches and things like that. But then there's also maybe people inside of your business. So are there some key people or some key people in or outside of your business that you feel like have been instrumental to your business? And tell us a little bit about that.
Well, not to give him too much credit, and I know he's sitting right in front of me, Chris, but honestly, I would not be nearly where I am without him. The types of tasks that he handles are the opposite of what I like to do. Have I done some of those tasks before? Yes, and I've hated every second of it. He enjoys those tasks for some odd reason, but he's really good at them and does a great job. So that's, I mean, honestly, a good partner is huge. My staff at the property management company, and I think with culture, that's really important. We instill no excuses, meaning that it's okay to screw up. We all mess up. We always do something wrong, but own it. Don't have excuses. And what can we do together to figure out the solution? I make mistakes. They all make mistakes. And I think our staff right now has a really good mentality of that. Just the always wanting to learn, I should say, and being able to risk a mistake, not staying stagnant. So,
what you're saying is Chris has all the successes for Chris, due to Chris.
Yes, exactly.
I thought that's what I gathered from that.
Yeah, no, I mean, I don't know what
the
else.
The painting is a Monet. He's got a Monet in the background.
Oh, yeah.
So.
I don't know what else to add to that. I mean, it's. I just want to thank myself, really. No, honestly, not to do this a scratch and back thing, but Collin, of course, I think one of the benefits is that we certainly have skills that we don't, they complement each other for sure, right? And we continue to push and push and push. I mean, I partner with many people who certainly would have stopped after the first 10 million under asset or after the first 100 units. And there's nothing wrong with that. If that's all you want and you want to continue doing something else that's your main job or something, that's fine. But the growth mentality that Collin and I have had in building this business and continue to help more and more people and ourselves, of course, build the business. I think I could not have asked for a better partner than Collin. Collin mentioned somebody earlier named Steven Sykes. He's been great throughout this as well. He was Collin's first partner. He's been my partner on a number of items. He's been our agent on some items, and we're partnering more and more. So he's been great as well. And then really just the ability to just continue to network, and hopefully we can give through, whether it's speaking in meetups or on the phone calls, all these people we're talking to, hopefully we can give nuggets of knowledge to people, because I know that we have grown so much because we have soaked up so many nuggets of knowledge from different people, whether it's through phone calls, listening to podcasts, reading books, and just sharing what we can with people. And, finally, I guess, coaching, like you said, I'm glad I got the coach that I did. Collin's worked with different coaches that we both have, actually. And, success leaves clues is what one of the things the coach said to me. And also just trying to turn decades into days. Like, if I could rewind what I've done, I would have started in 2008. That's when I read Rich Dad Poor Dad. And I was in the middle of law school. In the mornings, I was in the Army. And at night, I was getting my master's in negotiation. And so I certainly didn't think I had time to now jump into real estate. Now, knowing what I know, I would have jumped in. I could have jumped in. I should probably asked who, not how. And I would have started in 2008. And I think that would have been a phenomenal time to start, because then I would have been able to take advantage of perhaps some low-hanging fruit for the next 4 years. But I wish I would have started earlier. But anyway, the reason we've been able to grow so much is for all the 17 reasons I just said.
Yeah, I have someone, she's not a partner, I consider her a partner, but my sister, I hired her 10 years ago. In fact, that was when I fired my full staff. She was my next hire. I'm like, I've got to hire better people. And so I paid her twice as much as one of the people that I was paying before. But that was the change in my business. It was like, I didn't have to worry near as much about employees quitting or stealing or, whatever, all the other issues that I had, because now I had someone that I trusted. So it sounds like, Collin, with Chris, you kind of had the same thing where he came on, took things on that you necessarily didn't like to do, was really good at, and just took it to another level. And I think once you get that one key hire in place, it's like you can have a really good hire and it goes in one direction, which is like to the moon potentially. And then you have bad hires, which is what I had for the first 10 years. And like, you can pull your hair out. Right. So having good people on your team is super crucial. It's just not who can you put in there, but it's who are the good people that can have the fit in your culture, that can do a good job and fulfill the role that you need in your business.
Collin's like my little sister, basically.
There you go.
And you know what we did?
I thought Tony said you were my employee too. So
I think one of the things that we'd be remiss not to mention is that since I know I can speak for Collin when I say this, is that we should probably thank someone who's been instrumental in both of our lives, our wives, our respective wives. Collin and I talk all day, every day, whether that's annoying or not. It certainly is annoying, or it can be annoying to our wives, because we've dedicated so much time to building these businesses. It's not that whole sitting on a beach, I own real estate thing. It takes a lot of work. And certainly the fact that they're allowing this and they see our vision as well has been huge for us. So.
Yeah, totally. Do you have any kids, Chris? I
have 2 kids. Yeah, 2 kids under 2.
All right, awesome. Yeah, that puts another element to it, right? I've got a 1.5-year-old boy, and it actually makes, like, even though I work less, so like I have a hard stop at 5. Like, I promised my wife I'm gonna be home at 5 every day, and so it allows me to like shut off and like compact everything I have within like an 8-hour period. Whereas if I didn't have a kid and a wife, I would like probably work a lot later, just because that's my mentality.
Oh, yeah.
But yeah, it's cool. It's it's having something outside of real estate to look forward to, and especially if you have a family that supports you, that's super important.
Definitely.
Cool. So I like to keep this to about 30 minutes. We're getting to that time. I'll kind of turn it over to you guys. Is there anything else that you guys want to, I guess, give to the audience that could help them in their real estate investing career?
Go ahead, Collin.
I feel like we've already touched on it. Is teaming up, finding a partner, finding a mentor. If you're in even if you're in the middle stages, I think it's important to continue that growth. I mean, the most successful people have multiple coaches. I feel like the more successful you are, the more coaches you have, because you're trying to better yourself in multiple areas. So yeah, trying to get into a coach or find a mentor, but you also have to provide value. They're not going to hand you something. So just make sure that, go out there, get the education, and see what your value is. We've all got something to provide. So, it's, capital, time, or experience. And then there's, layers underneath that. So really kind of dive into what you have and what would be a good complement for you. But I am a big proponent of partnering.
Yeah, I mean, even though it's already been mentioned by Collin already, coaching is huge. I would hire a coach, hands down. That's the first thing I would have done back in 2008. I would have saved thousands, if not hundreds of thousands, and made hundreds of thousands, if not more millions of dollars, had I just paid someone a little bit of chunk of change up front to teach me, so I didn't have to teach myself. So I didn't have to look for this time during the day so I could listen to 14 podcasts to try to teach myself something. I think that coaching is huge. Sometimes there's a situation where coaching is maybe a little bit too expensive. I don't think it's too expensive at all. What I'm saying is, for an individual to be able to find or come to terms with actually spending that money, I think it's worth it. But if for some reason they can't get over that hump, I think it's just offering something, like Collin said, offering something of value. So someone could come to me and say, I don't have $1 to my name, but I did have a cell phone and I was able to contact the owner of a 78 unit down the street. It's off market. They will sell to us. Well, now that person doesn't have a coach. They can probably jump on this partnership because they're bringing us the deal. They can learn from us throughout the process. And they did all of that by just providing something of value. And I think that people don't understand that it doesn't take money always. It's just everyone has something to offer, and find out what you can do to be a part of it, I guess.
One thing I wish I would have done, and people ask me this all the time, like going back 20 years ago when you started your business, what would you do differently? And the thing that comes to mind, you already said it, like I would coach, mentor, that kind of thing. But I probably, coming out of college, I would have worked for someone that was doing what I wanted to do. Because you're getting paid for it. You're getting to learn their system. You're getting to learn the business. And that person would hopefully become a mentor to you once you go out on your own. So that's a piece of advice that I give to a lot of new investors. If they, can't find a mentor, or they're not real set on their path, like if you're an attorney or something like that, it'd be kind of hard to maybe switch into, getting a entry-level job in real estate. But a lot of younger people coming out of college and things like that want to learn the business, I definitely recommend them working for an organization that's doing what they want to do, because they can get a lot of good hands-on experience and make money in the process. So
that's awesome.
Well, cool. Chris, Collin, I appreciate you guys. Congrats on your success over, the short amount of time you guys have been doing this. You guys are scaling up quick. Anything I can do to help, I'd love to be a part of it. Collin and Chris do bring on investors passively. So if you guys are interested in investing, we'll put a link in the chat notes for you guys to connect with their company, and look forward to connecting with you guys again.
Awesome. Thanks for having us. Appreciate it.
All right. Thanks, guys.
Appreciate it. Thank you.
All right. Talk soon.
Thanks for listening. Now go to www.remcommunity.com to connect with today's guest, see our high-level masterminds, and to get free resources. Don't forget to share this with a friend and leave us a 5-star review. We'll see you on the next episode.